Hey, what's up, YouTubers, day traders, and market participants? Sorry I was gone for a little bit. I had some family matters to attend to, but I am back. It is your boy Will, and when there's a will, there's a way. I have a really good video for you guys. I'm going to be showing you guys exactly how I entered and exited my trades, and these are on the hot stocks right now that everyone is speculating on: Rigetti, NNE, hymns, all of the good ones. Have a go. I got it all in this video for you. All I'm asking for is a like. I have great experience. I've been taught by some of the people from Wall Street who played the game in the 80s and 90s and know everything there is to know about it. So I'm going to be teaching you guys. All I ask for you guys, from you guys, is a like. Comment, let me know if you found this useful, what you're trading, or if you've ever, how do you approach your trades? Because I think that is the bread and butter of how everyone makes money is how you approach your trades. Why'd you buy? Where's your stop? Et cetera, et cetera. But without further ado, let's get into. All right, everybody. Here is Archer. So this is the daily chart we have here on the right hand side. Where does it look like there was a good time to buy? This is the 8 moving average, and this is the 20 period moving average. And right down here, which is not on this chart, is the 40 period moving average. So when you get between the 20 and the 40, it actually becomes kind of a golden zone for most investors to start picking up some make a position. So with knowing that, I already bought here. I bought on the day it closed at the low. So here is that's my stop. So if the next day it opens up and violates that bottom, then I'm out of the position. That's just how simple it is. But guess what? Guess what it did? The next day it gapped up and ran. So did I take profits? No. Because now we actually have the perfect green takes over red, first case scenario. So I'm waiting at least for another push. We get the next push, opens up, drops, then pushes back. Here is actually where I added more to the position because green has taken over red above the moving average here, above the 20. And then pop, we get another candle up. It's amazing, right? It's just that picture perfect. So I still have a little bit left. I am waiting for another candle to shoot up, maybe take out the highs by Friday, maybe. All right, so that was the approach I took with Archer, and just to kind of show you exactly how I believe I went for the 718 contracts, strike price, I believe 15. They have got a lot of open interest and a lot of volume. So I was able to get in and out of this position quite easily due to that. So basically, this was Thursday on the bottom right here, but it hit that range that I was telling you about, that 40 moving average. So that's where I entered my position. Did not do anything on Friday, and then I started selling into this strength, but it went down on me. So the first sell I got was at 65%, which is very good. Very good for a 2 day play. Thursday, Friday, and then the Monday open up, right? So very good day overall. Then I got actually sold a little bit more the same day to get my 100%. So now kind of everything on the table is free after that. Um, Then I waited for the next day. It opened up, but it also did another one of those red downs and then shot up with the green. So honestly, I shouldn't have sold this. This could have waited and could have turned into more of a 239 because I did sell on this giant green candle close to a moving average like this. No, you don't sell that. You sell this candle away from the moving average. So that's something I got to work on myself. Sometimes I'll see the profit and be like, okay, that's all I need. But you want to focus on selling at the end of candles, buying at the end of candles after you've confirmed the move. All right. And then I sold a little bit up here. So this sell I'm more happy with. and now I'm still holding on to the last piece, like I said. So hopefully we don't violate any of these lows. We gap up and we just keep going once again on Archer. So very, very solid play so far. And that's what I really did. I used the daily chart to hone in on what stock could make a run in the next few days. And boom, here's one for you. Gave you great percent return on your investment. So, what else am I looking at? All right. Another trade that I'm in right now. I haven't done all of the research, or not all the research, but I haven't put all the PowerPoint stuff together. But here, let me go ahead and add this right now. This drives me crazy. All right, so I had to add the 40 period moving average. And just to verify with you guys on the last stock that I looked at, watch, it just came perfectly to the 40 period moving average and bounced off of it. Is that coincidence? I don't know. So going back to Rigetti. All right, same thing with Rigetti coming into that 40 period moving average here. You can see you could have bought here at the end of this day and held that low. As soon as you break the low, you're out of the trade. You would have had to endure a few days, right? But nonetheless, you get paid right when this happens, right? So I didn't get out of all of my position yet because we finally have that, just since last example, we finally have that green taking over red near key moving averages to try to get us back up here to 15, right? So on the day, the price action looked okay. I mean, it's holding this level right here, 12, kind of like 1208 to 1215 is a pretty good spot. And then if it gets down to 1191, 1190, um, that would ultimately be where I would want to get out. If it goes under 1190, then I'll cut the rest of it tomorrow. But if we can shoot up and go past the highs of tomorrow, or even have an inside day, if we have an inside day, that's a don't do anything type of day. Just hold and wait for the next position. Or even if you get an inside day, but it kind of closes a little bit more on the low side, but still stays within this range, then I could see myself adding more to the position as well. But currently, right now, this is a wait and see type of day. I did sell a little bit in at the end of this candle and at the end of this candle just because it was so strong and I was up like 200%. So you have to take that. So just have I got a little bit left, and I actually added too. I added right here. I'm pretty sure because I saw it starting to go back up, so I added here actually. Um, so yeah, I'm not gonna give this too much room to breathe because I don't want to erase my profits. But if it takes out this level right here, then that's it for Rigetti. But same type of concept of in this zone buying the push back up. Because every time you get in this zone, right here, red, green, push up, back in here, wait for green, push up, out in here, get this green, pushes up, drop back down. This time it was even stronger. This time the 8 moving average caught it. 8 moving average caught it. The 20 moving average here, you could have went for that trade right there, right? You would have bought in here at the end of these days or at these lows, and then this candle would have took you out. If you would have been stubborn about it, then this candle would have took you out, and you would have took a bigger loss. But because not everything's perfect, not everything is perfect in this game, and that's exactly what you have to understand. You always have to have your stop. So um, that's it's not as picture perfect as the other one. And another one that I'm currently in is Avogo. Avogo looks really good. Here's your daily chart here on the right hand side. It just looks beautiful. Look at this power trend it's been doing for months. Just power trend. This is the ADMA. Just straight power trend. It like never broke it one. It broke it here for just a few days and then just went right back up. So it was trending on the 8 and never just broke it. So now when we get in here, I figured I don't even think we have, I don't think we're even going to get down to the 40 yet. The 40 might not come into play for a while. So what did I do? I bought at the end of this green right here. So I got my little two, I got my two little I don't know how we should call it, but we got our two little plus signs here. Two little plus signs are great. They show consolidation, and if the last one to be in your direction, I mean, sometimes the colors doesn't matter, but it is a better sign when the color is in your direction lastly. So, boom, that's where I entered. Stop is under those lows. At the end of the day, I bought there. That's it. The next day, wake up, there's good news, yada yada. The news really doesn't the chart's telling me what the stock wants to do. I don't really care about the news. And basically, we have this candle that starts open, goes down, but then finishes up at the end of the 15 minutes. So didn't take profits there at all. I believe I started trimming here, but I really shouldn't have touched this at all today. I should have just let it go. Why? Because that is the first push off of here, off of the 20. Look at the first push off this, you get a gap up. First, like good push, you could wait for the next day to sell. Good push, get next day to sell. Good push, and you just kept going. Good push, another day. Good push, and hopefully we get another good push. Maybe it hits 256 or 258 tomorrow, or maybe the 8 is now going to be resistance and pushes it down. I don't think that. I don't want to think that. So I'm watching the 15-minute. We got above the 200 for a while, then we came back, but then our handy dandy 20 caught us right there. It caught us. So now I'm just waiting for the next day to see where we go from here. Well, I hope you guys found some value in this. I do want to become a financial educator myself. Been doing it for 10 years. So if you found any value in this, please like, comment, subscribe, join the family. Down the line, I'm going to be releasing more courses and stuff like that. But right now, this is what you got. Peace.